Hi, everyone. This is Jeff Prasen for Interactive Brokers, and it's my pleasure to welcome back to the IBKR podcast studio, Scott Bauer from Prosper Trading Academy. Hey, Scott, how are you?
Jeff, I'm great. I just wish there was a little bit more snow out here in Colorado where I am right now, but it is what it is.
Well, I guess if you didn't leave Chicago, you'd have that snow, right?
Exactly right.
Anyway, obviously, as always, love having you coming here on Wednesday mornings for a sort of 5-minute market recap from the week before and kind of looking forward. And I want to kind of jump right into it, Scott. Let's talk about what everyone's thinking about, crude oil prices, right? One day they're spiking up, next day they're cooling off. Is this 90 to 105 like the new range for a while, do you think? Or do you think it'll kind of get back to the pre-conflict price of 60, 70?
Well, sure. I think 60, 70 is longer term where we're going to be. What does longer term mean? I mean, it means when, there's a de-escalation or this whole conflict is over, because the bottom line is economics will still take over and there's still way more supply than there is for demand. But that's the question. When is that going to happen? So for right now, sure, 9105 is this range, but that can change, as we know, in just a nanosecond. So, I would suggest that if anyone is trading crude futures, you've got to do it very diligently, have some stops in there. But yeah, that's the range for now.
All right. And we're right in the middle of the Federal Reserve March 17th, 18th meeting. It was kicked off yesterday and going through today. And obviously with this heightened uncertainty we just talked about from the Iran conflict and new global tariffs that seem to keep popping up and going away each day, how might these external shocks influence the Fed's rate decision and kind of like their forward guidance?
I don't know about you, but I'd love to be in the meeting room with Powell. It's market is now pricing in no cuts until maybe even the fourth quarter. And the PPI print this morning certainly didn't help that, certainly muddied the waters from the inflation standpoint. And that doesn't even include what we may or may not see as a shock given the Iran escalation, the Iran conflict. So yeah, there is definitely heightened uncertainty. And I think that, the script is already written and we'll hear from Jerome Powell that inflation is sticky and the tariffs and the conflict, all of that is putting things into question, and the Fed is staying the course. They're still going to work on their mandate of the dual mandate of keeping the jobs market in place and our unemployment in a certain range and getting inflation down to 2%. So I wouldn't expect much out of him, though the market, again, is really showing now that there's no expectation of a cut until much later in the year.
Yeah, that leads me perfectly into my next question. Really, just the market reactions investors should anticipate, especially like in bond yields and the US dollar and some of the risky assets. Sounds like they're kind of pricing in a pause, at least for now.
Yeah, absolutely. And I'm actually surprised this morning, that given PPI print, that we didn't see yields push even higher than they are. I would have expected to see the 10-year maybe back at 4.3 or so, where we were just last week. And when you talk about risk assets, and I think we're in this environment right now that, historically some of those risk assets would be what people want. Gold and silver, that's certainly reacted today. We are going to see higher rates as opposed to just kind of that safe haven trade. But again, that can change at a moment's notice.
And in a while, it's been a while, or it's been going on for a while, I should say, like the sort of, they call it the Great Decoupling, right? Where the US markets are really outperforming the global indices in general. What structural advantages, like for example, energy independence, AI leadership, are really driving this divergence for the US? And can this kind of continue in the face of these rising geopolitical risks?
Yeah, you just hit it, right? It's energy independence, which I'm not sure that other countries maybe don't have, but we definitely do. AI leadership, but I think this can continue. But, we've been talking about, is there an AI bubble? Is there too much spending, capital expenditures on AI? And so far it's been okay. And the bubble talk kind of is on the back burner for right now. So once we get beyond this conflict, whether hopefully it's much, much sooner rather than later, let's see if the AI expenditures hold up. If we start getting next quarter guidance from some of the big companies, Meta, Amazon, that still are investing into AI. And if that happens, then yes, I believe we will still remain this, the top of the chain, and this resilience will continue.
Great. And just real quick, any final thoughts for the week ahead?
We have a monthly expiration on Friday. There's a lot of volume out there. There's a lot of option open interest. And we know when we get to these triple witchings or quad witchings, whatever you want to call it, which we have this Friday, we can see some added volatility. So I would expect volatility to remain here. But again, right now, it's not the Fed. It's probably not even PPI anymore. It is what's going to happen later today, tomorrow with the escalation that we're seeing. So I think everybody just needs to kind of keep on their toes and keep things a little bit closer to the vest.
Scott, thanks a lot for stopping by. For more from Scott, you can go to prospertrading.com or go onto our website, IBKR.com, click on education, look for podcasts, webinars, articles, and everything from Prosper Trading and Scott. Scott, thanks a lot. Until next time, looking forward to talking with you.
Thank you, Jeff.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. Options involve risk and are not suitable for all investors. For information on the uses and risks of options, you can obtain a copy of the Options Clearing Corporation Risk Disclosure document titled Characteristics and Risks of Standardized Options by going to the following link: ibkr.com/OCC. Multiple leg strategies, including spreads, will incur multiple transaction costs.